Hello everyone, welcome back. In this video, we will learn what is an income and expenditure account in the context of non-trading concern. The income and expenditure account serves the same purpose for a non-trading concern as the profit and loss account for a trading concern. It is also prepared exactly in the same manner as P&L account. That is, all incomes on the shown in the credit side and all expenses shown in the debit side. However, in case of non-trading concern, the excess of income over expenses and losses is not termed as profit, but it is called surplus. Similarly, excess of expenses over income is called deficiency. The income and expenditure account is prepared with the help of receipt and payment account and the additional information available. You know, the income and expenditure account will show income and expenses only for the period for which to which it relates, and that too on an on accrual basis. Hence, while taking figures from receipt and payment account, you will have to make necessary adjustment. For example, if the amount of subscription received during 2017 includes rupees 200 relating to 2016, it should be deducted for the purpose of computing the income from subscriptions. Similarly, if the amount of subscription relating to 17 are still to be received or it is still outstanding, it would not appear in receipt and payment account, but it has to be included in the income and expenditure account for 2017 and so added thereto. Another precaution you have to take relates to the distinction between capital and revenue items. In the income and expenditure account, you are to include only the revenue items and the capital items will be ignored. Then you'll also have to provide necessary amount of depreciation on all fixed assets and make provision for doubtful debts. These items do not appear in the receipt and payment account. Let us now list the steps to be followed for preparing the income and expenditure account from the receipt and payment account. In your screen, there is a receipt and payment account example given, or more or less all the items that appear in the receipt and payment account is appearing here. So how do we make an income and expenditure account using this receipt and payment account? The steps are as follows. Go through the receipt side for ascertaining all items of income and the payment side for all items of expenses or losses. Kindly go through both the sides. Ignore opening and closing balances of cash. That two balance carried down, cash bank, and bike balance brought down, cash and bank. These two has to be ignored. Ignore capital receipts and capital payment. Any capital receipt here like donation to building, furniture, these things has to be ignored. These are of capital nature. Ignore receipt and payment relating to preceding years and following years. If, however, a receipt or payment includes any amount which relates to preceding or following year, the same should be deducted. So suppose subscription. If total subscription received during the year is given without mentioning that total subscription received is for particular year, that is current year only, you may have to adjust any amount that you received for last year or you have received for next year. Add the outstanding amount to the respective items of income and expenses. If subscription received during the year is 10,000 and in the adjustment it is given maybe 1,000 rupees is still outstanding, so total subscription will become 11,000 for the income expenditure account to be posted there. Provide the depreciation and doubtful debts if required. And if any fixed asset has been sold during the year, compute the amount of profit or loss on such a sale and show the same in the income and expenditure account. Note that the sale of old sports material is not to be regarded as sale of fixed assets. The total amount received from such sale is an income. Let us examine the income and expenditure account now. Let us examine the income and expenditure account. This is a typical format of an income and expenditure account. Here on the debit side, all the expenses are given. These expenses are all related to current year only and they are of revenue nature only. And on the credit side or right hand side, these are all income. These are again revenue nature and they belong only to the current year only. Okay, so the surplus of income over expenses is called your surplus. Excess of income over expenditure we call it, and surplus of not and sorry or a surplus of expenditure, these all items, if they are bigger than the total of these items, this is called deficit or excess of expenditure over income. Okay, so this is a typical format of an income and expenditure account. and the surplus will be added, and deficit will be deducted from the capital fund of the organization. Thank you for watching. Have a nice day ahead.